having us today. What an exciting panel I get to moderate. We have so much diversity on stage, from stage, sector, geography, and experience as well. I'd love to kick it off and get everyone's background. Particularly would love to learn where you're in town from today, and what stage, sector, and geography you're focused on and your firm is focused on investing in today. Patrick, why don't you start off?
Great. So I flew in from Shanghai. That's where my office is based. And we're looking for generational names which will solve some of the world's biggest challenges. And China is sort of a strong element of that story. So that's where we start. And we actually do a lot of thematic analysis of the world and trying to understand how these companies kind of fit in competitively. And we do everything in an interdisciplinary kind of a manner. And especially today when we think about AI, is actually going to impact across many sectors. And also is potentially will reformulate a lot of work processes for every company. So we're generalists, but we're looking for the best companies and the generational names.
Tony, why don't we have some background on NEA and yourself?
Yeah, great. So I'm Tony Florence. I'm with NEA, and I came from far and wide, about 15 blocks away. I walked over here. So we're based in New York. As a firm, we're based in Silicon Valley in New York. We have offices in Europe, and our investing activities are quite global. We focus primarily on tech and healthcare only. So from a sector perspective, those are the two areas that we focus on. Obviously, those are pretty broad. But and then stage-wise, we invest at the seed and early stages of company formation. We do some incubation, and then we also do growth stage investing. We've had the good fortune of having a 5-decade-long track record and have been around for a while, and just really excited to be here.
Thank you. Christine?
All right, well, it's great to be here. I'm Christine Tsai, CEO and founding partner of 500 Global. I'm here from the very exotic city of Palo Alto, California. But 500 is a venture capital firm that invests pre-seed all the way up to pre-IPO. This is our 13th year. Our portfolio is quite diversified in terms of sector, stage, geography. We have about 2,700 companies in our portfolio to date. They represent about 80 countries around the world. 500 is headquartered in Silicon Valley, but we as a team are global. We've been investing both US and around the world since 2010. Key markets for us are, in addition to the US, Latin America, Southeast Asia, Middle East, North Africa, Sub-Saharan Africa, Eastern Europe, and then Taiwan, Korea, Japan.
And Arvind?
Thanks, Rabia. I'm Arvind, the Chief of Markets, coming in from sunny Abu Dhabi. So we are the financial district at Abu Dhabi, and we've been the fastest growing financial center in that region last year. Today, 8 years in, we're over 6,000 entities, over 200 financial firms, 1,500 operating firms. We recently expanded our jurisdiction. And so today we're the largest concentrated financial district in the world. So big ambitions in the region, and look forward to speaking to the panel about it.
Great. And I previewed this with you guys backstage, but just so the audience has a perspective of the breadth of experience geographically of how much reach you guys have in an investment standpoint, what's the most interesting place you visited through your investment career? And it's a one-word answer is fine. Patrick?
I started traveling a lot since last September. And prior to COVID, I used to travel as much as like 176 days a year, globally actually. And since I started to travel, and for this time and last September, I've been to Saudi a couple of times. And I think that city has changed a lot. And Abu Dhabi is another amazing city. It has changed a lot. You know, kind of a COVID is sort of give you the gap, right? And it's almost like you wake up and you show up to the same place you've been before. Then you found something really exciting. I think the cities, they're booming. They have a big ambition and they know what they're trying to do. So I think it's very exciting. And also I brought some of the best Chinese companies there and meeting with the local businesses.
Well, you know, it's a hard question to answer. We have 550 companies in our portfolio. We've backed probably 1,000, and over those 5 decades, you know, most of the significant cities here in the U.S., all over Europe. Certainly, you know, and I'm here actively in the U.S. I invest in Europe. I go to the Middle East a lot, and even in Asia. I would say Nairobi is probably if you ask like what's the most unique place that we've made an investment in, which was a very successful investment in a company called New Globe, previously called Bridge International, but I would say Nairobi.
Great. Christine?
Yeah, that's a very, very tough question. I guess a couple places more recently, maybe in the last 8 months, I would say definitely Mexico City, although we've been there many times. So Latin America is a region we've been investing in, like many of our other regions, for the past, you know, almost more than a decade or so. But we have a number of companies there, and I think more recent to that is Malaysia, where we also have one of our, I think it's actually our second largest hub in terms of our team after the U.S. We have a number of investments. We have a very active Southeast Asia practice as well. It's a great food.
And Arvind?
I'll have to try to be not biased here, right? Because the obvious answer would be Abu Dhabi. But listen, I mean, one of the great things about being in the region that we are is we've got over 220 nationalities in the UAE, right? And we've got corridors with, you know, with the US, with Europe, with India, with China. I mean, we work with everyone, right? So I would say in the last 12 months, I mean, the trips that I've enjoyed probably are to New York. This is my 3rd trip in 3 months. You know, it's been London. India, you know, where I think there's massive growth as well, which is interesting, and China, right? I was in Hong Kong late last year, and that's very interesting there as well.
Great. Well, thank you guys for sharing that. We can't start a venture discussion these days without talking about macro. So, Christine, this one is for you. With the sharply increasing interest rate environment that we are sitting in today, we've heard that it's been detrimental to a lot of companies in the venture space. Would love for you to comment on whether this 25-year venture super cycle that we've had is essentially over, or if this is just a blip and we'll see continued growth. And maybe you could give some examples from your portfolio as well.
Yeah. I mean, I think that's definitely a lot of the conversation in terms of if this is an apocalyptic situation, the end of venture tech valuations. I mean, I definitely think that if it is the end of a cycle, it just means that another cycle will happen. It's such a cyclical market, and we've seen this over the past like several decades. You know, 500 we launched just not too long after the 2008 crisis, so it was a very different time. And I think for venture, especially where we like to enter companies at the early stages, innovation and technology and entrepreneurship is kind of immune to cycles in that it doesn't stop, right? And if anything, there's a lot of activity at the early stages, and these are 10, 15-year horizons. So I think even if right now the macros are not looking particularly optimistic with a lot of things that you mentioned, you know, for us, we continue to invest. We continue to see that these companies you know, that get started today, especially in 2023 and going into 2024, and I'm sure fellow panelists will agree that it's actually a great time to be investing, especially at the early stages. And even today, what's different is it's not just Silicon Valley; it's going to be a global story versus, say, 2008, 2010, when 500 first started. That it was very much a Silicon Valley story. So. I'd like to say that 25 years are taking us back to even before the dot-com boom and bust, which also seemed kind of like very, very dark times, very, very different from what it is today. but definitely that more of the perspective that markets are very cyclical, and then looking purely from where we sit in tech and venture capital, especially for kind of the pre-seed seed stage where we like to start relationships with companies, that it doesn't necessarily impact us in terms of continuing to invest in these founders. So, but more to directly answer your question, it's potentially a more significant blip, perhaps. But again, I think if this cycle ends, it just means another one's going to start.
Yeah. And Patrick, do you share that view, given your long experience investing in China? I mean, do you think it's a significant blip, or do you think that your economy that you're investing in will recover faster?
I actually started my career investing in public equities globally, and actually in the U.S. mostly to start with. And I also funded businesses. I greenfield businesses. I managed very large businesses in the past, but I was also kind of an investor throughout my life. So I agree with Christine that we've seen a lot of cycles. And you've just seen the sentiments like a pendulum just swing pretty hard either way. And when it swings pretty hard either way, and the people think can swing more, that's how everybody feels. And but in our business, I think when we come down to fundamental analysis, understanding what are the drivers for profit and future growth, and then we started to have an idea where we should spend our time. And I actually believe today there are a few things that are so important. For example, demographics is worsening for every developed economy in the world. And there's energy transition, and on top of that, there's this new AI thing, generative AI. These are the global themes. It requires the talents from everywhere in the world to contribute. And as a solution to this, I think there's a lot of value to be created. And certainly then we talk about the assets are investable or not, but I still think that's kind of the next question. But the first question is fundamentally, are we actually with the companies who can solve the biggest challenges for the world or give us the biggest upside? And we should spend more time with these entrepreneurs than help them build a business with a better governance.
Well, so Christine, you brought up a really good point. And I keep hearing this point as I talk to people. Now is a great time to invest. Now is a great time to invest. So, Tony, you guys have the benefit of having NEA just raised 2 large funds totaling about $6 billion, which brings your total little bit over $6 billion, which is a huge feat in this market. That totals over $25 billion of assets under management for NEA. You have all this dry powder now. It's a great time to invest. What are you deploying it into? Are there enough opportunities to deploy it into? Have the valuations come down enough to be attractive? Would love to hear from you.
Yeah, look, I mean, I think just, again, to put context to my perspective, we invest across both technology and healthcare. We have a little bit of a global view, and we do, kind of full life cycle investing from seed and incubation, early stage venture capital, and growth stage investing. So I think one of the things we've learned over 5 decades is that, we kind of crawl, walk, run into new areas. We don't change our strategies too much. We have a dynamic allocation model where we can go in and out of areas, that we think are exciting or less exciting. So, but I think, we've long believed in time diversification. We believe in the diversification of the end markets that we invest in. And so, what we'll be doing is not too dramatically different than we've been doing for a long time, but with different emphasis points. I mean, clearly we've been through, sort of some significant macro events, globally, frankly, with COVID and then the interest rate environment and the equity market sort of uplift, and then what's happened recently with interest rates and the dislocation in the public markets, and that's had a trickle down effect certainly on our markets. So, but from an investing standpoint, we're still very constructively active on a lot of the areas in early stage that we've been active in for quite some time. You know, AI is really right hot today, very, you know, topical, you know, a lot of awareness. We've been investing in AI and machine learning for, you know, almost a decade now. So we're really excited about that area, but, you know, we have been. So you'll see us continue to stay very active there. You know, certainly in the infrastructure side, we think what's happened a lot with in the enterprise software market, and in infrastructure software, and you know the data infrastructure is going to be key. So those are areas that we're really excited about, and all things really data science related. I think certainly, you know, on the financial technology markets, you know, infrastructure and applications, we're still really, you know, pretty bullish on. We're excited about e-commerce and marketplace infrastructure technologies, are things that fundamentally power a lot of that, the tools there, and certainly in and around the edges of that from an application perspective. So those are areas that we've been investing in, being quite active, and we'll continue to. I would say that, you know, we've been more active on the seed and the early stage of recent. We found, you know, if you look back over our 50-year arc, you know, our best opportunities from an investment standpoint have come in and around or after these big dislocations. So what does that say? That certainly that there is an element that this should be, you know, by historic standards, a really good time to invest this year and the next couple of years. We don't think it's just a this year thing. We think over the next, you know, kind of 2 to 5 years will be a really, really exciting time for a lot of the innovation trends that we're seeing. You also, ironically, it's a little bit counterintuitive, but you see entrepreneurship accelerating during these times. You know, the switching costs for young founders to come out of big tech companies or big private, you know, well-funded companies are a lot lower today. And so, you know, we do see an acceleration of, you know, entrepreneurship, and, you know, I think that's bearing out in the things that we're seeing every day. We're seeing more and more exciting young companies with founders, and so we expect that to continue. At the growth stage, we've been a lot more disciplined. I think there's a longer lag effect at this cycle than there has been in the last couple. I think principally because there's been so much capital put into these markets, in the private markets that is, and many of these companies headed into this downturn relatively well capitalized. So, you know, I think there's just a lot more patience that's needed, but there's no doubt that, you know, we're going to see some really exciting growth stage investment opportunities. Yeah. And, you know, we look at the fundamentals in our portfolio, and look, there's a lot to be concerned about with the macro environment. Certainly, you know, this recent 6 or 12 months, but the fundamental growth rates that we're seeing across the areas that we invest in, you know, is still relatively extraordinary. You know, we're also seeing really great big breakthroughs, you know, with certain areas of technology. Healthcare is adopting technology at an accelerating basis, and so we think there's going to be really big breakthroughs over the next 5 to 10 years in, you know, drug discovery and life sciences, and, you know, kind of fundamental deployment of those solutions, that technology, and certainly in digital healthcare and digital tech. So, you know, digitization is not going to go away, and it's certainly not going to escape healthcare. So we think healthcare also has a lot of tailwinds. I think that, you know, the key is to sort of, you know, stay in the areas that you really know well. You know, we tend to lead with very deep domain expertise, and that's, you know, been something that we're really proud of. We've been doing for a long time. You know, get into areas where you know you can really help affect and build really big companies, which has been a hallmark of NEA, and company building, and, you know, building really big enduring businesses. And so, you know, we see the conditions, you know, relatively positive in the early stage, and a little more conservative, but over time will be, you know, we think equally exciting on the growth stage.
Great. And Arvind, you guys are in a unique position as well, having capital to deploy, almost being spoiled for choice, where a lot of funds and companies are coming to the region, and the opportunity is there. What are you guys focused on? What are you deploying capital in today, and at what pace?
So I think there's two perspectives to look at this, right? One is Abu Dhabi and the region in terms of capital deployment, and second is the activity that we're seeing within the region. From a capital deployment standpoint, I couldn't agree more with the panelists, right? I think this is a great time for us to deploy capital. You know, Abu Dhabi has deployed capital in the last 12 to 18 months in multiple companies at a significant discount to previous runs, right? So it's a great time to invest in great businesses, right? So that we're seeing. And the good thing about Abu Dhabi is, these are blue chip institutions that have what we call patient capital. So they're willing to play the long-term game. And I think if you're willing to play the long game, this is a great time to get in, as the panelists said. The second element that I would also want to focus on is the region itself, right? I mean, we look at Abu Dhabi as a gateway to a broader region, which we term as MEASA, which is Middle East, Africa, and South Asia. To put it in perspective, the flight from Abu Dhabi to any of these places is shorter than a flight from New York to San Francisco, right? So it's, this is $8 trillion GDP, fastest growing region in the world, right? So we believe we are well positioned to kind of look at that as a hub. And then even if I were to look at the MENA region, I mean, in 2022, it was circa about $4 billion of funds raised by companies in the MENA region. About 50% of that was from companies in the UAE, right? So, we've always been at the forefront of innovation in the region. And I think because we've not been probably as exposed in the region to the asset price bubbles that happen in other parts of the world, I think there's still a lot of opportunity to invest, right? The secular trends continue, digitization, whether it's healthcare, whether it's education, whether it's, fintech, we've been very big on that. Those trends continue. So we believe that both from a deployment standpoint, but also from a regional standpoint, I think the growth is still very much intact.
And that's important. So backstage, we were talking about regionally, one of the focus areas for you is China. So, Patrick, would love for you to talk a little bit about China investing today. You've been on the ground for so many years. Tell us about the cycles in China right now and how that's evolved over the last 10 years and what China allocators are thinking of today and what they're investing in and what the opportunity set is for a China-based VC.
Yeah. Listen, I mean, if I may, it was backstage, and Tony and I were talking about China. And Tony used to go to China like 4 times a year. He hasn't been back yet. And I don't know you guys even know the data. The flights today between China and the US was 5% of the capacity before COVID. So that's how little traffic there has been between China and the US, two of the largest economies in the world. And the people don't come, don't talk, and then you start to forget about the other part of the world. And interestingly, when people kind of wake up from the COVID start, you can travel to China without staying in quarantine. And the first thing was the auto show in Shanghai. And a lot of the American brands, automakers, and European automakers showed up in China. They went to the auto show. They were just amazed by how beautiful the products are there and for electric vehicles. And I don't know if you guys know the numbers. And last year, China actually produced and sold 7 million EVs. That represent about 60% of world's production. The number one EV producer in the world is not Tesla. It's a Chinese company called BYD. It outsold the number 3 BMW by 5 times in Q1. And if you look at renewable energy, especially in Europe, right? People feel the pain. They want to, kind of decisively embrace renewable energy. Today, 82% of the solar panels are made by the Chinese private companies. And energy storage last year, 130 gigawatts was shipped. And Chinese companies was responsible for over 80%. So this is what's happening. I think it's important for all of us to think about, yes, we're investors, we invest in this world, and everything is global. There's a lot of interlinkage. And AI is very much interlinked, and energy is very much interlinked. So I would really encourage every of you and to spend some time just traveling, COVID is gone, and to see different parts of the market and see what everybody is up to. I think you will be kind of surprised to see, oh, okay, this is actually how China is operating today. And just to give you an example, when you think about solar stuff, You think this is like, probably requires a lot of labor. But for some of the newer lines I went to see, it's all robots. There's nobody working in the plants. So it's just fascinating. I think it's important for everybody to see. And then you make up your mind. That's how I see it.
That's a great statistic on the EV vehicles that you were mentioning. Patrick, you spent time investing in China earlier in your career. Obviously, the China-based investors are seeing it. Is the Western world seeing that too? Is it still an investable region, kind of from your perspective and from NEA's perspective?
Yeah, I mean, look, well, what I would say to Patrick's comment, I mean, I haven't used United Airlines in the last 2 or 3 years, but I've used Zoom. Zoom has replaced United Airlines in some ways for some of that activity. But look, we've been long-term investors in China. We've been investing there really since, I think, 2002. We've got a really great portfolio of nice young companies and some more mature companies and some really great partners in China. So, it's an important area for us. I think long term, how do you ignore the pace and level and excitement of innovation that's happening in China and combine that with the significance of the end markets that they're serving, both in the enterprise and the consumer. So I think, China will always, as will Asia overall, have an important role for NEA as we think about deploying capital. And we're been very honored to be part of some really great companies over there, and we'll continue to do that, over time. And that the COVID did, do a little bit of a disruption in terms of travel, but I think some of that stuff will start to pick back up, frankly, over time.
Thank you. And Arvid, we've seen from your region just tremendous amounts of entrepreneurs coming to the region, setting up. You guys recently announced that El Reem Island is also under the ADGM jurisdiction, which is super exciting and telling of the growth that you guys are experiencing, even during this downturn in the rest of the global markets. Can you tell us a little bit about what that means and how you've been seeing that shift happen, where more and more people are coming to the region? Talk to us about what that means for entrepreneurs, the community that's being built there, and use some examples of companies that you've recently seen.
Listen, I think the value proposition of the region, especially in the last few years, has been very, very compelling, right? I mean, as Abu Dhabi Global Markets, we're very fortunate. We're quite young. We've only been around for 7 years, but we've seen growth that is honestly, very accelerated. And I think one fundamental advantage that we have, of course, is we've got direct application of English common law, right, in our jurisdiction, as you said. So from a civil and commercial standpoint, you're independent of the onshore law. I mean, that makes it very convenient and comfortable for investors and corporates alike to come and set themselves up in ADGM. But outside of that, I think the value proposition, and this is the region, and then more specifically Abu Dhabi, is a few things, right? I mean, access to capital. I think everyone knows this quite well. Abu Dhabi, we're home to 3 of the largest sovereign wealth funds in the world. That's circa $1.5 trillion, and then you're talking about the family offices. So you're talking about capital pools, close to $2 trillion, in Abu Dhabi alone. Then let alone the region. Access to markets, as I said, I mean, a third of the world is within a 4-hour flight, right? So I think access to those markets from Abu Dhabi as a hub, we've got over 100 double taxation treaties, right? We're, very friendly with, most countries around us, have very strategic relationships, whether that's the US, that's UK, that's China, that's India. We've got very strategic relationships with all of these places. So I think access to the markets from Abu Dhabi, that's something that we've seen a lot in the last few years. The third piece, I think, which is very telling, is access to talent, right? Today, the region is a sought-after place for global talent to come and live, work, and play in, right? Historically, the biggest compelling factor would be tax reasons, right? But today, don't get me wrong, tax is still a benefit, but it's not the primary benefit. You've got world-class infrastructure. You've got a very high quality of life. Abu Dhabi is the safest city in the world. It's been the safest city in the world for the last 6 years, right? So, talent today wants to increasingly come and work, in the region and in the UAE in general. The fourth thing I think is around the focus on building ecosystems, right? The UAE has always been in the forefront in terms of driving an innovation-led economy and a knowledge-based economy. So, one of the things that we've tried to do at ADGM is build meaningful ecosystems, right? So, if you take an example of the tech space, right, as one example, today we've got over 30 venture capital funds that are there already on ground and investing. We've got a platform called Hub 71. That's part of the ADGM platform. That platform has over 200 startups, right, that have raised over $1 billion in the last 3 years. Have generated over 1,000 jobs in the last few years as well. So we've got that, and then on the regulatory front, we've got, hands down, I think one of the most progressive regulatory frameworks in the region. So whether you talk about environmental assets, you talk about digital assets, you talk about VCC frameworks, we're probably the most progressive, right? So I think it's all of those reasons why we are seeing this. And last but definitely not least is the top-down focus from the leadership, right? I was telling this backstage as well. Today the financial sector is circa 5% of our GDP, Abu Dhabi's GDP. The stated objective is to triple that, right, in the next 3 to 5 years. So yeah, I think all of the reasons is why we are seeing the level of growth that we are seeing.
Yeah. Thank you. And Christine, you have a lot of access to entrepreneurs. You understand the trends of where people are moving. Have you seen this trend where people are setting up in the Middle East? And then also, where else are you seeing people kind of set up their companies, or where have you seen funds moving, other funds? And then also, where are you seeing people move away from?
Well, we have a unique vantage point in that we've been investing, I think like my fellow panelists, but we've been investing both Silicon Valley, US, as well as around the world since, for the past 13 years. So we definitely have seen this evolution in terms of, actually what I would start with is more the founder's mindset in terms of the ambition to be a global company. So many of them may start in their home markets and have some ambitions to be global, whether that means literally the rest of the world, or going to the US, or going to other parts of Asia. And I think especially in the last few years that has influenced domicile, where they've recruited teams. I think certainly the pandemic has made it a lot more acceptable and the norm to have remote talent work remotely. So we definitely see a lot of that synergy with Southeast Asia companies wanting to expand to the Middle East, or Middle Eastern companies wanting to expand to Asia, US, Europe. So it definitely is the case. And I think in terms of that desire to set up either an office or a hub or team members in other parts of the world, it's definitely a lot more, not just common, but I think it's a lot more the expectation if you're going to scale your company past, maybe not so much at the seed round, but certainly past Series A, Series B, as you start to think about like how to grow your company, how to scale, reach customers. Capital is obviously a big influence in terms of finding partners who help support that vision into expanding into a certain market. I think Abu Dhabi is a great example in terms of really trying to attract that talent, trying to make it easier for entrepreneurs, and the pace at which this change has happened in places like the Middle East as well as other markets around the world. It's what's needed. I think it's one thing to have founders and strong talent, but they can only go so far within the ecosystem that they're in. So that is something that we definitely have observed. We also have observed a lot of the collaboration between different markets. And I think, despite your point earlier, like at the beginning of this panel, the macro environment, certainly if you talk to, say, US allocators who are overweighted in venture, they might have a bit of a different view. But we see ADGM being very active, trying to triple the growth coming from tech. We see this in many markets around the world. We even see this in the U.S., trying to, more of the governmental public sector push to invest into technology and entrepreneurship. So despite all the talk about valuations and kind of the things that have happened, a lot of the fallout that's happened in certain sectors over the past couple of years, tech and entrepreneurship innovation is still seen as a big driver of that economic growth, and we definitely see that on the ground, and I think that'll only increase around the world.
So we'll stay with you for a minute and double click into one of the buzzwords we've heard on this panel a few times, which is AI. You can't talk about venture today without talking about the disruptive theme of AI. How is AI disrupting your investment process, and how are you guys thinking about investing in AI kind of cross-border?
Yeah, I think that it's funny, the VCs want to invest in innovation and be contrarian, but then we kind of all have a FOMO over the same things in terms of just a year ago it was probably Web3 blockchain, and now everyone is kind of really clamoring over AI, and I think AI sector hasn't gotten the memo in terms of the rising crazy valuations, but I do think that when you look at the different platform shifts that have happened over the past 15 years, and when 500 first started, again back in 2010, if you remember that time, that was really the rise of a lot of these kind of quote Web 2 platforms. Costs to start a company were coming down dramatically. They were able to get user acquisition, customer acquisition much more cost effectively and much more quicker. Platforms like social platforms, mobile. I definitely remember the days when my background prior to 500 was at Google and YouTube during these days, and YouTube was primarily viewed on the desktop. Now it's a very different point. But working on mobile device distribution, less than 1% of YouTube playbacks were on a non-desktop device, and now again it's probably flipped the other way. So it definitely a very different time in terms of how companies have been able to get distribution and innovate. Now, when you think about AI today, I think definitely it is an example of another significant platform shift. Both companies that are kind of being built with AI at the forefront, not necessarily being pure AI companies, but there's still plenty of problems out there to be solved. You have fintech, edtech, health is obviously still, there are a lot of tailwinds there. Consumer, and what are these companies, what's possible now, being able to power, really build their companies with an AI mindset first. And I think that is going to be really transformational from the consumer perspective, certainly from businesses. And I think also for companies that are already operating today, especially some of the later stage companies, many of them, if they haven't already been considering how AI is, how their own products are potentially disrupted by AI, that is definitely something they should be paying attention to. So I definitely think that there's a lot of disruption to come, both with existing technology companies as well as these new companies that are going to be formed in this year and next year.
Yeah. Thank you. Tony, so we have the pleasure of having you on the panel. You've been on the Midas list many times. Would love to hear from you what the most, with the few minutes that we have left, would love to hear what's the most misunderstood thing in venture today?
Well, I think today, we're living in a moment where we're trying to figure out what the macro is, month to month, quarter to quarter, just because of the Fed and the stock market. But I think, at the heart of what we do, there's a duration to impatience level that I think is maybe, publicly misunderstood. Trying to build, an enduring company that's, something that's going to become a really big, important business globally, over decades. It just takes a while, and so even when times are more confusing, if you will, and uncertain, like today, there's a really deep level of excitement around some of the things that are being started today, new companies, new company creation, and it's hard to have that long-term perspective. Some of the companies that we're investing in today, they may not get public for literally 8 or 10 years, and they may not hit their kind of acceleration point for longer, or they may get public in 4 or 5 years, but they may have 2 decades of an opportunity. So I think what's misunderstood is the duration of the opportunity and the size and the scope of the opportunity typically. So when we think about the arc of what we do, we try to get into companies that have that sort of like double hit of a long duration of opportunity where they can have sustained differentiation and value creation and a real value proposition, and 2, they have a big enough market where they can create billions and tens of billions of dollars of market cap. And if you do that right over time, it can be quite significant, and it has the added benefit of doing a lot of great things for the economy and society and all the things that we love to do. I think the second thing is that there's some incredibly hard problems that are going to get solved by a lot of things that we're just hearing about today. I think just think about the big industries that we've talked about up here, including, by the way, healthcare. There's some incredibly powerful, complex, hard problems that are going to get solved with technology, and so that's a really exciting opportunity.
Well, thank you so much for those insights to all the panelists. And I do think we're out of time today, but thank you, Salt, for having us.
Great, thank you.
Thank you.